And as we just mentioned earlier, this is the third consecutive time that the Fed has raised rates by 75 basis points, signaling how serious inflationary pressures have gotten in the United States. And joining us now to discuss is the co-founder of Reflexivity Research, Will Clementi, and we've got Market Gauge Group Managing Director, Michelle Schneider. Michelle, always a pleasure. And Will, great to have you on the show. So Michelle, let's start with you and your reaction, top takeaways from the Fed decision that we've just heard.
Well, in the last several Fed meetings with raises, we've actually seen the market initially rally because they keep thinking that that's it. But he actually has also said that there's a possibility of 2 more rate raises to the tune of 1 point equal, or total, I should say, as we end the year 2022. But he also said 2023 early, he sees the peak, and then getting more accommodative as we get into 24, 25. So I'm not exactly sure if this is just a knee-jerk reaction on selective hearing by the market, but there is a couple of things I think you can sink your teeth into. Number one is we're very much in a trading range and have been for a while. That 3,800 level in SPX has held, 3,900 now, the new sort of interim resistance, 4,000 would be even better to clear. And even if we go to Bitcoin, Bitcoin's really been trying to hold between the sort of 18.5 level, 19,000. And so the whole month of September has really been about this. When things look God awful, the buyers come in, and when things start to look really great, that's when the sellers come in, and that's typical of a stagflation period trading range that we saw in the late 70s.
Will, would love to have you jump in here. What were your key takeaways from the Fed's decision so far?
Sure. I guess just to add on, I wouldn't really, have much to offer in terms of, kind of macroeconomic insights that anyone on the show has probably come on and added. I would just say that, I think they'll continue tightening until either something breaks or you start to see inflation roll over. And with this recent CPI print on a month-over-month basis, you actually do not see that. So, I think they'll continue kind of on their path until one of those two things happen. I do think it's also funny today. You saw the same kind of pattern with the FOMC meetings that you've seen over the last 3, where you kind of saw an initial sell-off on the announcement of a rate hike, and then a kind of a market recovery afterwards, and today followed that pattern as well. That would just be kind of my expectation from kind of a, Fed standpoint. But, in terms of Bitcoin itself, I think Bitcoin has found, pretty strong demand sub 20K. Several on-chain metrics in terms of, kind of broader valuation that we look at, as well as in the order books, especially on Coinbase and FTX spot. You see very heavy demand for BTC sub 20K, basically going all the way down to about 12K.
All right. So Federal Reserve Chair Jerome Powell spoke moments addressing concerns over inflation and how it can play a role in monetary policy. We have a clip. Let's have a listen.
I don't know if we're supposed to hear that. But...
We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and the evolving outlook for the economy.
So, Michelle, what do you anticipate as the impact on economic growth and unemployment going forward from the Fed?
Well, clearly people are looking for a recession. Obviously, the fact that we are at the yields higher in 2007, we know all what happened after that. But of course, that was the mortgage debacle that really started things going from bad to worse, is really going to be the question of this recession. I think is going to be based on a couple of things. Number one is, right, if they get way more aggressive, you don't really typically want to see a lot of interest rate rises into a slowing economic picture. So in terms of inflation, I think that's probably bigger focus than what's going to happen in terms of the economic recession, because as Will did point out, with high CPI numbers, what I think could actually start to happen here is we can see the yield curve widen further, where the 2-year treasuries continue to rise, but the long bonds actually start going up. And so when I say going up, I mean the TLTs go up, but the yields soften. And if that happens, essentially what you're looking at is a potential spark or reignitement of inflation. which of course then would create havoc and would make the Fed have to really do sort of the Volcker moment, which everybody thought he was going to do today. So I guess, in other words, to kind of put that more simply, if we really stop thinking about recession, hyperinflation, or whatever, and we look at what we've got going on, we have a clear stagnating economy with rising prices and a geopolitical hotbed of problems, considering Russia, Ukraine's heating up again. There's always the question of what happens right now in Iran's going crazy, whether that escalates to anything else, and also China, Taiwan, which now China, of course, is in bed with Russia even more so. So I think that's what we have to watch. We have to watch the geopolitics and then how that's going to increase already sensitive high prices in commodities, and then what Powell has to do or doesn't do, in which case we could see a hyperinflation environment like we saw at the end of the 70s, and then it'll be, can Powell have what Volcker had, which is the, nice way to put it, but let's say the nerve to really spike and get everything back down and drive us into sort of a mini recession.
Well, Michelle, some analysts noted that a full point hike would have been radical and signal to the markets that the country's central bank has lost control and is in panic mode. So is this 75 basis point rate hike the right decision here?
I was actually one of the people who hoped that he did a 1% rise now, because even though it would have made me been a little bit painful, I think the message to the market would have been clearer that he's done for the year. And then we could have seen some kind of settlement at these lower trading ranges more confidently as a buy. But I also think it could line up with what might happen maybe by the middle of October. Don't forget, we also have a election coming up, the midterm elections. So, yeah, I would say that 1 point would have maybe hurt initially. This 75 basis points to me is more concerning because it means that he's still not as hawkish as what he may have should have been, all things considered right now.
So, well, I'll have you jump in here, but, what'll ultimately be the impact on risk assets like Bitcoin? And will it just continue moving with the markets, or what do you see happening, your outlook for Bitcoin going forward?
Yeah, sure. I think just to first tag on to what Michelle said, I think we've got this existential crisis in Europe on energy, right? I mean, if you look at German and French, electricity costs are basically, going absolutely parabolic. So, heading into the winter, that could become a very serious situation. In terms of what this means for Bitcoin, despite what, myself and other kind of more ideologic, fundamentalists around Bitcoin would have liked to see, the market continues to treat Bitcoin as a risk asset. When we look at the year-over-year change in liquidity conditions, look at, like, for example, the year-over-year change in M2 money supply, that's basically tracked the year-over-year change in Bitcoin's price on a percentage basis almost to the T. So, would continue kind of to expect Bitcoin to kind of trade in this lower bound range at a minimum as, these liquidity conditions, remain constrained.
So, Will, what's the strategy trading in and out of Bitcoin at this time?
I think from our end, kind of the way we're approaching things currently is, we're not really trading much, in terms of, just short-term allocations. If we are doing any short-term trading around, event-driven things, stuff like that, it's a lot more kind of, lower size than what we would, usually do. Kind of our current, strategy is just thinking about more long-term positioning from, a Bitcoin standpoint, looking at kind of strategically allocating, accumulating a position for, kind of the next, 2-3 years on the back half of this tightening cycle. We do, as I kind of mentioned earlier, see that, we see this kind of strong valuation range for BTC sub 20K. And I think kind of getting an opportunity to buy, anytime that, we see the market kind of wick below that 20K area into this, what we believe is kind of a strong demand level, we are looking to add at those levels.
Michelle, finally, what do you see going forward for the Fed in terms of continuing to raise interest rate hikes of this substantial amount? Do you foresee that continuing in the future, or when do you see them raising that in and actually, begin to do cuts?
Well, we have GDP coming up, so I think that's going to be a factor. Obviously, when we get into October, we're going to be looking at the unemployment numbers, jobless claims. This is what Powell is watching. And so he will be more emboldened to continue to raise as long as he thinks the labor market is still strong and the economy may be screeching to a halt, but not going into deep recession. Obviously, housing numbers are a concern there as well. So I actually don't know if they necessarily have a huge plan to continue to raise. They're going to be looking at inflation data going forward, obviously geopolitics. But the one last thing I just want to say back to what Will said is, first of all, our crypto analyst totally agrees with you, Will. He felt that September was a month you just avoided trading in the cryptocurrencies, particularly Bitcoin and Ethereum. He's looking at maybe October in that 20,000 range. And I just want to say, age-wise, he's in your age bracket. So I think it's great that you got brought on the show and get to talk about that, because obviously the future for Bitcoin and Ethereum is in the hands of this generation in the digital age. So I just wanted to add that little personal touch.
Thank you.
Michelle, we always love your macro take, and Will, we always love your crypto take. So thank you so much for joining. That was the co-founder of Reflexivity Research, Will Clementi, as well as Market Gauge Group Managing Director, Michelle Schneider.